and today I'm actually going to be talking about the crash pair, the crash 500 pair. So now on this crash 500 pair, we are currently on the 24 hours time frame. So on the 24 hours time frame, we can see the highest point of chart that Deriv has been able to show us on TradingView is basically October 2023. So now we would simply make good use of that information. And then we can find out that the lowest point since that time is this point, which is around around 2024 January was the lowest point market can show us. And then the highest point market also can show us is this area. Now before I mark it, let me mark this. So this is actually the highest point the market can show us. Now this highest point is basically 2024 May. So we have January, February, March, April, May. January, February, March, April, May. So that's about 5 months. So for 5 months we had markets trending to the upside. October, September, November, December, January, February. So about 6 months. This is 5 months. So basically we just want to section what we have. This is when the points market they give us allowance to be able to see the charts, the highest data. Then this is the lowest point market has created during this particular time frame we are operating on, and this is the highest point market has tested during this particular time frame we are operating on. So now what else can we look at? One thing I can clearly see again is during this time, considering this as a high, we can clearly see that we had this. So we can clearly see that we had a break of structure. And from this area we got break of structure, we can also clearly see that we can plot our trend line from this high to this high here. And then we got a good break of structure also relating to the upside. Now that is a helpful information. That helped us to know that we have closed from the downtrend and now we are in an uptrend. Now in this uptrend, we can clearly see one, which is our break of structure. And then let me make it a little bit wider so that you are learning from this and you're learning a lot. So basically, this was a break of structure which we got market clearly breaking to the upside and clearly returning to the downside. Using our Fibonacci strategy in this section between this break and this point is actually going to be of help. And then if we should use that will make us plot from here to this high. And basically we can see that market got into our 0.79 level and then triggered from that point. We got a buy entry. So from this point we got a buy entry, a wonderful buy entry, which we decided to take profit at this point. Now for some traders who are able to be patient, they will be able to hold the market up till when it gets to the final take profit using this strategy, which is a minus 0.27 level, which is here. But for me, I don't like to hold my trader because I'm conversant with, I'm okay with market hitting my take profit and I'm good. So now, that being the case, we can now begin to look at the structure, the uptrend structure that happened at this point. So the uptrend structure was from this low, this now becoming our new low. We got markets testing that area several times, created So market created this particular area, created this point, and then we got a break of structure here. So now, in addition to this break of structure here, we had, sorry guys, yeah. So in addition to this break of structure here, we had this, which was our first break of structure to the upside, and then we had another one, this, which was the final break of structure to the upside, before market did what? Broke trend line and also broke the support, which created a break of structure. Now with this piece of information, we clearly understand that this now turns our liquidity grab when we get it, our break of structure. Using this particular trend line method, you will also see that this is also, we got a break and retest. Now, allowing this market to flow down, and when it breathes in, we take our strike. When market breathes in, we take our strike. So now, what can we now see? We can now clearly see that from this point here from the swing high to the swing low, where if we want to make things a little bit more, we label here as our point A, and then we label this area as our point B. Then we label this break here as our BOS. So label this area as our BOS, this is our point A, this is our point B. So from our point A to our point B, we clearly saw that market retraced into this particular candlestick, which created a break of trend line, and also market retested the 0.618 level, which is our level for our entry. Now remember, this is on the higher time frame, which is the 24 hours time frame. So all of these moves, when you catch this move on the 24 hours time frame, you can now come during the days, you can come and look for entries from this point to this point, and you are good, you make profit. So that being the case, we have this here. We have this here, and then we have this as our take profit. So that is that for this. Now after this has happened, we now do what? We can now see that this is our new BOS. So for a less clumsy chart, I would simply just for a less clumsy chart, I would simply pick this BOS and pick this as our new BOS. Then our new low, we pick it, place this as our new low. Our new A level, we pick it, put it at this A level. So now, that being the case, what do? We've gotten our break of structure, and then we've gotten our swing high, we've gotten our swing low, and then we'll place it there. Now placing it on our swing high and our swing low, what can we simply get? We can clearly see that market is actually respecting the fair value gap. So no, not really the fair value gap. Actually, there's a structure. There's actually, like, sometimes some people call it another block and all of that. That zone which creates the break of trend line. So we can see which create the break of structure. Market is actually respecting it. That's why we have this 50 level here. So that is the level market is respecting. On the weekly time frame, I believe you'll be able to see this zone very clearly. So that is what we have market respecting. And then from there, market also gave us our entry. Market also gave us our entry. And even using this formula, you would have been able to secure shorts from this particular area to the downside, and I will explain. Now, you would have been able to get one, which is a break of structure at this point. You would have been able to get a break of structure at this point, a retest, and then a continuation. Now, that is for this particular market. Now, after this has happened, what can we see again? We can clearly see that we've gotten a new break of structure at this point. we can clearly see that we've gotten a new break of structure at this point, and this is the trade which we are going to be on, and that's the reason I'm making this video. So, and when market hits take profit, I would always do well to bring that information to you all. So now what can we clearly see? We can clearly see that this is a break of structure at this point, and then this is our swing high and swing low. So this is our swing low, and this is our swing high. Now there's something you guys will see here which I already know, and I'll explain. Now after we position this as our break of structure, you see that if we clone this, this is also still our break of structure, which is this area, still remains our break of structure. Now when you mark your level, which is between this point A and point B, when you mark your zones, which is point A and point B, if you look at what happened, I really want you guys to see it so that you understand this market better. Now when you see we mark our point A and point B, you can see the market actually went to hit our stop loss, which is this our point A, and then got into it back and then began to react. So there are two things you will do. You cannot take, when it hits your stop loss, you just take it. You accept that you've hit stop loss. But then, so this particular level was taken out. You understand? Now, what do we do? Our point B remains the same. And then what do? We cannot adjust it. How do we adjust our trade? We now pick the break of structures. We can see we pick the break of structure and take it to the previous break of structure that created this liquidity at this point. When we take it to the previous break of structure, what can we see? We can clearly see that market got into the 0.618 level. After this reaction, market got back into the 0.618 level and then continued this move to the downside. So currently, what are we on? We are currently on a sell. If you have taken a sell at that point, you just simply be holding it. You put your stop loss here, and then your take profit will be here. That is very crazy money. That is very crazy, like very, very silly money basically out here. But then what are we looking for? For me, I'm looking for on the smaller time frames, I'm looking for what we would consider our so basically what am I looking for? I'm looking for so I'm basically looking for the reaction on the smaller time frame to now take my decisions. So I'm looking for the reaction on the smaller time frame to take my decision on this particular trade. So what do we do now? I simply would now come to the smaller time frame, which I'll just go straight to the 1 hour time frame. Now on the 1 hour time frame, when I shrink the chart, I can now see what happened. So basically here I can see, okay, let me put it on 4 hours so you guys can see it clear. So on the 1 hour time frame now, I can clearly see that we had a break of structure at this point. But if I want to make a better one, we'll get a better break of structure at this point because we have liquidity grab, break of structure this high, and then can now plan our trade. Now this was a liquidity grab. When you pick this move between here and this high, you simply get the retracement which market did basically here. And then that was what created markets respecting this point, which was the first entry we would have been able to take. Picking our shots here, and this would have been our take profit. So what are we waiting for now at the moment? We are simply waiting for market to do its thing, retrace. Okay, no, it actually tapped into this point here. So what are we waiting for at the moment? We want market to retrace basically into these levels or into this new swing high level. So depending on how market reacts around here is what we decide how we'll take our entries basically. So that is it, guys. Have a wonderful Sunday. Peace, guys. Peace. One love.